Google and Groupon, it is the deal that never happened, but the decision to walk away from $6 billion, is it one that Groupon and its backers will come to regret? It's a question for somebody who understands startups and venture capital. Bob Rice, the general managing partner of Tangent Capital. Prior to Tangent, Bob was chairman and CEO of Viewpoint Corporation. Bob, good morning.
Morning.
You know, $6 billion, how often do people walk away from a number like that? It makes me wonder whether Groupon and its backers aren't just a little too greedy. What do you think?
I'd vote for greedy. Yeah, what it reminds me of is Pointcast. You remember Pointcast back in the late 90s? They turned down $500 million from News Corp and sold the company 2 years later for $7 million.
Do you really think that's what's going to happen with Groupon, though? Is it really just something that is effectively like Pointcast, a flash in the pan that people are going to realize 2 years from now really isn't everything it's cracked up to be today?
No, look, I mean, they're a lot more relevant than Pointcast. They've cracked two really important ideas: how to attack the local advertising market and how to monetize social networks. So they've cracked the secret code on two important ideas, and they're going to be relevant for a long time. Still, I definitely would take $6 billion for a two-year-old company.
Okay, relevant, and they've cracked a secret code. But at the same time, there are many who say that in the sort of daily deal world, let's call it, there's no barrier to entry. Do you agree? There's
very little barrier to entry. I mean, you need local sales forces to really crack the local markets in these things. Send your people out to the nail salons and the restaurants and the bars until eventually the market catches on to the self-service idea here. But generally correct. There are a lot of people who can compete with them, and there are a lot of people like Foursquare, for example, a lot of companies that already have active social networks that they could turn on to this kind of a business model fairly easily.
You know, Bob, here's the question. Who ultimately is calling the shots here? Is it the venture capital backers, or is it Andrew Mason, the guy who founded Groupon?
Look, you never know until you're in the actual room, and I'm not there. I have to imagine that the investors, though, would be extremely happy to take this deal. Now, sometimes what you see...
So you think there's a good chance that Mason actually was the driving force behind rejecting Google?
Well, here's what happens a lot of times that you don't really know. There's investors and there are investors. The very early stage angel guys are frequently at loggerheads with the VCs who have come in later. There was a lot of money that was put in early this year, and those companies really may have stars in their eyes and feel like, hey, you know, $6 billion isn't cool, $60 billion is cool. To paraphrase the Facebook movie. And so that there may be some dichotomy there. Mason, I keep thinking, you know, that guy just needs to talk to his parents and ask him what the right thing to do is here. I think they'd tell him to take the money.
Is Google potentially a factor here? Is there something about Google's $6 billion that's less attractive to Mason or to Yuri Milner from Digital Sky than somebody else's $6 billion?
It's a funny thing about Google. They've gone from, you know, the hottest, coolest company in the world to sort of, they've got this kind of Microsoft air that's starting to grow up around them. Yesterday's news, where's the growth story? It's not so cool. They're having some brain drain. They're having some talent drain these days. So it's true that it doesn't have the same panache as it might have had a couple of years ago.
Is Google enough of an innovator to be able to develop a daily deal or online coupon business of its own inside Google without having to resort to a $6 billion acquisition?
Well, they've failed to do so far. And frankly, Google understands algorithms and things that can be measured. They don't understand local sales forces. They don't understand social networking. And so I think it is important for Google to find a management team that can handle this for them. And this would have been an ideal transaction for Google, even at $6 billion, because strategically it fits two very important things. Local search and local advertising dwarfs the online advertising that's already been happening. Google has to find a way into that market, and this would have been the right way for them.
Well, you know, the stock market has been rallying as of late, but Google stock has been doing nothing but going down. Are the Google investors not recognizing what an Achilles heel it is for Google not to have social networking expertise? Because they were trading the stock down largely on concern that Google was overpaying for Groupon.
Right, and I think that was a real mistake. I think that's looking at the very short term. Oh, $6 billion, that sounds like a lot of money. But you have to look at a year, 2 years, 3 years. Google also faces a fundamental challenge in its core business model, because as people move to mobile computing, they're doing less and less general search, which is where Google has historically made all of its money. So long term, they have some real strategic issues to solve. This would have solved two very important ones for them right away: local advertising and social marketing.
In the short term, do you see any hurdles for Groupon because of the fact that they walked away from this deal? Do they need money?
No,
it's probably not difficult for them to raise it even if they did.
Super easy. They raised $100 million or so early this year. It would be very, very easy to raise more money for them, and they're growing very rapidly. Now, some of the news accounts, I think, are inflating the revenues of Groupon fairly significantly. Nonetheless, it's clear that they are growing very rapidly, so they're not going to have any trouble raising money. They're not going to go, Andrew Mason isn't going to have trouble buying groceries in 2 years. But I still think that it was a real mistake not to use the leverage, the resources of Google, and really take this company and put it onto the next plane.
It's a fascinating story.
It is.
Bob, you said it. You think that greed perhaps trumped reason in this particular situation.
No doubt in my mind.
Bob Rice of Tangent Capital Partners talking to us about Google and Groupon.